Okay, let's get into eToro's third quarter numbers. The first thing that really jumps out is the clear evidence of operating leverage in action. This is that crucial signal we're always looking for, where the business is demonstrating real scalability. Profits are just plain growing faster than the top line.
So here are the headline numbers that prove that point. You have net contribution coming in at $215 million, which is up a very strong 28%. But the number to really watch is that adjusted EBITDA, which is up 43%. That difference, that delta between 28 and 43, that is the entire story. It's what's fueling that 370 basis point expansion in the EBITDA margin. It's a textbook example of an efficient, scaling business model. And of course, that financial performance has to be built on something tangible. In this case, it's a solid base of user growth. Funded accounts have climbed to 3.73 million, a 16% increase. Now, management was very clear on this point. This isn't just growth at any cost. They repeatedly emphasized that this is a result of a very disciplined, data-driven marketing strategy. They're focused on high-quality, organic account acquisition, not just empty numbers.
And when you bring in those high-quality users, you see the direct result in capital inflows. Assets under administration hit an all-time high of $20.8 billion. That's a 76% jump year over year. That's a massive number, and it represents more than just deposits. It's a really powerful signal of both user trust in the platform and the performance of the assets held there.
Now, digging a layer deeper into the commission mix, you see a really interesting internal rotation of capital. Contribution from traditional capital markets was actually down 21%, but look at crypto, up a massive 229%. Management repeatedly frames this not as a weakness, but as a fundamental strength of the platform. Their users are able to follow market momentum. In this quarter, that was clearly crypto, without ever having to leave the eToro ecosystem. That diversification is a core structural advantage.
So the strategic engine behind these results is a very clear and relentless focus on product innovation. And if you listen to the CEO, Yoni Assia, the phrase you hear over and over is artificial intelligence. He's positioning AI as the absolute next frontier for investing. It's clear this isn't just a talking point. It's central to their product roadmap and how they plan to drive future engagement. Management essentially laid out a 5-part strategic flywheel designed to keep this momentum going. You have product innovation, with AI and tokenization at the absolute forefront. Then there's global expansion, both broadly and with a very specific deep focus on the US market. Add to that a broadening product offering across their 4 pillars and a clear intention to lean into major macro trends like the great wealth transfer. It's all designed to work together to increase user engagement and ultimately capture a greater share of their wallet.
And speaking of that US focus, the launch of copy trading there is a pivotal milestone. Management described this as a foundational piece of their strategy for unlocking the world's largest capital market. This isn't a new experiment for them. They know this product works. It's already a core feature for about a third of their global users. So deploying this proven engagement driver in the US is a very significant move. All of this strong operating performance flows directly down to the balance sheet, and the result is a truly formidable capital position. They closed out the quarter with $1.2 billion in cash and equivalents. This isn't just a safety net. Management views this as a strategic asset that creates significant optionality for them moving forward. And they are already beginning to activate that optionality. You see it in the strong free cash flow generation, $57 million this quarter alone. And you see it in their capital allocation decisions, specifically the announcement of a $150 million share repurchase program. That's a very clear signal of management's confidence in the value of their own equity. That, combined with their stated capacity to pursue strategic M&A, shows a very confident and proactive capital strategy.
So, when you take everything into account, the strong execution, the strategic clarity, and the growing financial flexibility, this quarter from eToro scores a solid 8 out of 10. The operating leverage demonstrates excellent execution. The focus on product innovation and US expansion provides a clear strategic direction, and that strong balance sheet creates significant future optionality.